Welcome to this week's market analysis from June 30 to July 4th, 2025. Nifty 50 closed at exactly 25,405 on July 4, 2025, making a decisive 0.69% weekly decline that reversed the previous week's bullish momentum. The first week of July 2025 represented a significant consolidation period for Indian markets, driven by persistent foreign institutional outflows, rupee weakness, and escalating India US trade uncertainties ahead of Trump's July 9th tariff deadline. The week showcased a gradual erosion of bullish sentiment, with Nifty 50 declining 0.69% for the week, retreating from the previous week's high of approximately 25,637 to a confirmed closing of 25,405 on Friday. Sensex mirrored this weakness while Bank Nifty faced additional pressure despite touching previous highs early in the week. Foreign institutional investors dominated selling, with persistent net outflows totaling to 1,561 crore rupees during the week, bringing the month to date FII selling of 3,531 crore. This represented a complete reversal from the previous week's massive buying, creating sustained downward pressure across large cap indices. Nifty opened near 25,580 on Monday, June 30, cautious start amid emerging FII selling pressure. Tuesday, July 1st was seen as profit-taking intensified as rupee weakness emerged, Nifty declining to 25,520. On Wednesday, July 2, midweek stabilization attempt around 25,450 to 25,500 range. On Thursday, July 3, fresh selling emerged on trade uncertainty, Nifty testing 25,400 support. On Friday, July 4th, consolidation session with Nifty closing at 25,405, volumes moderate due to holiday shortened week. Pharmaceutical sector emerged as a standout performer, with Nifty Pharma surging 2.08%, demonstrating defensive characteristics amid broader market uncertainty. Consumer durables followed with impressive 2.77% gains, reflecting continued domestic consumption strength despite external headwinds. Banking sector faced the most significant pressure, with Nifty Financial Services declining 1.75% and Nifty Bank falling 0.72%, as rising US Treasury yields and trade uncertainty weighed on financial stocks. The divergence between PSU banks and private banks highlighted selective institutional positioning. Top performers were consumer durables with 2.77%, pharma with 2.08%, and PSU bank with 1.96%. Mid-tier gainers were oil and gas around 1.41% and IT around 0.89%. Underperformers were realty sector with minus 2.21%, financial services with minus 1.75%, and FMCG with minus 0.68%. Auto sector, despite midweek strength, ended marginally lower at minus 0.11%. The derivative market showed defensive positioning, with increased put buying around 25,000 to 25,200 levels and call writing at 25,500 to 25,700 resistance zones. Weekly options data indicated cautious movement ahead of July 9th trade deadline. INR emerged as a significant underperformer, weakening against the USD, driven by multiple factors including strong US employment data, routine import demand, and persistent FII outflows. The currency's decline from strong levels achieved in the previous week highlighted the fragility of recent gains amid external pressures. Brent crude demonstrated remarkable strength, hovering around $68.75 per barrel as of July 4th, marking a substantial 5.21% monthly gain. The price rally was supported by multiple factors, including geopolitical tension, OPEC production strategy adjustments, supportive US inventory data, and favorable macroeconomic signals. Gold prices witnessed increased volatility throughout the week, primarily driven by anticipation of upcoming US inflation data and Federal Reserve policy signals. The precious metals movement reflected broader uncertainty about monetary policy directions across major economies. Global commodity strength, particularly in energy complex, created headwinds for import-dependent sectors while benefiting domestic oil and gas companies, explaining the sector's 1.41% weekly outperformance. The week marked decisive technical consolidation across major indices, with Nifty 50 retreating from previous week's breakout highs around 25,637 to test crucial support at 25,400 and 25,405. The decline represented a healthy pullback from overbought conditions, though it raised questions about momentum sustainability. The first week of July 2025 delivered a reality check on Indian market euphoria, with Nifty's decline to 25,405, representing a healthy but concerning pullback from previous highs. The convergence of persistent FII selling, rupee weakness, trade uncertainty ahead of July 9th deadline, and global yields concerns created challenging conditions for domestic equities. The critical test will be whether institutional flows stabilize and technical supports hold, particularly around Nifty 25,350 to 25,400, as markets navigate the crucial July 9th trade policy deadline and await further clarity on US India economic relations. Traders should monitor FII flow reversals and crude oil price sustainability as key catalysts for potential momentum resumption. Stay informed, stay invested.